In previous videos, I talked about creating a strategy and how important it is. In this video, I want to teach you practically, step by step, how to build a strategy from scratch so that you can reach consistent profitability. Hello, and welcome to the Tradiology channel. First of all, before you start trading, I recommend using mind relaxation techniques and always starting your trading day with a calm mind. Now, I'm going to enter TradingView and select a trading pair, for example, the gold chart. To begin with, I recommend trading currency pairs. This way, it will be easier and more profitable for you. I've brought the chart back to its previous price action, and I'm going to create a strategy in front of your eyes so you can learn how to build your own strategy. As I mentioned before, you need to learn an analytical method, and in today's example, I'm going to use price action analysis. The first thing we need to do is select a time range for our work. Set the start time of your work to align with the opening of the trading sessions so that you can enter trades when there are stronger movements and more financial backing. If you don't know what trading sessions are, make sure to search for them, as they are a very simple concept in trading, including the opening of the New York and London markets, which are two very important sessions for trading. There are other sessions, but these two are particularly significant. Personally, I enter trades when the New York market opens because typically, the volume of financial markets is higher than at other times, and the market behaves more logically. You can choose 2 or 3 hours more or less from a session and trade during that time every day, and that's enough. Try not to trade too much or too little in terms of time. When you trade excessively, you might get tired and continue in this condition, deviating from your strategy. On the other hand, if you trade in shorter time frames, you may not find any trades, which can frustrate you. So, find a reasonable time duration based on your own characteristics. 2 to 4 hours a day can be logical. I'll use 3 hours a day as an example, but customize it according to your strategy. Before anything, identify the time of the New York or London market opening according to where you live. You can check this on various websites. For instance, on the Market 24-hour clock website, you can find the exact time for the opening of the New York and London markets by specifying your time zone. Now, back to TradingView. I'll set a 3-hour time range on the chart, and we'll create our strategy. I want to create a trend-following strategy, entering trades only when the market is trending. Otherwise, I won't enter. First, I'll mark the support and resistance levels. The plan is to enter trades when we see strong candles in the direction of the trend during a pullback. However, according to my view, I'll draw the levels slightly lower. Now, do we see a strong trend here? No. The market is in a range. So, we wait until the range ends. Here, the market breaks the range, and we're likely to start a trend. So, now we can enter trades based on signals and start backtesting. We'll test with the first pullback and the strong candle. We won't enter on the first candle because it's weak, but the second candle looks good. This is when we enter, and the reward to risk ratio is 2. So we go to Excel and record this trade. Now the market goes back into a range, and we wait again. Once we see strong candles breaking the range again, we can enter the trade, waiting for the pullback and strong candle. After entering the trade, our stop is hit. Do not change your entry strategy. When you see your stop hit, accept it. Managed losses are a part of every strategy, and don't try to adjust the stop point when you see it hit in the backtest. In backtesting, be strict and embrace those moments when your stop is hit to evaluate if the system you're creating is profitable or not. Now, let's go back to Excel and record this loss. Next, we'll see the setup again and enter the trade. This trade was profitable with a reward of 3, so it should be recorded in Excel. Now, the day is over, and we should continue testing the next day. Let's move to the next day and set our 3 hours again. We'll draw the levels first. Here, the market breaks the range upwards, pulls back, and then a strong candle forms. We enter the trade, but this trade hits the stop. This needs to be recorded in Excel. After the next pullback, we enter again, but our stop is hit once more. At this point, I'll draw conclusions from these stops, so pay close attention. After this stop, the market enters a range, and we can enter the trade after seeing strong candles breaking the range. We enter the trade, and the market gives a reward of 6 in this trade. The second day ends, as we've reached the end of our trading hours. I hope you understand that the analysis was straightforward and that the trades were executed to help convey the lesson. You should backtest your strategy with your own analytical system to become proficient. Now, let's move to Excel. Let's assume we continue testing in the same way for the rest of the days, and the rewards and losses are recorded like this. I've written these numbers based on a real system, and I want to review them with you so you can understand how this strategy works. The total number of trades tested is 32. You need to test up to 100 trades. This is just an example for explanation. We've tested 32 trades. The number of wins is 17, and the number of losses is 15. The number of Reward 1 trades is 17, Reward 2 is 15, Reward 3 is 8, Reward 4 is 4, and Reward 5 is 2. If we calculate the win rate for each, we see that in this strategy, the optimal reward is definitely Reward 2, which wins about 47% of the time. Since the reward is twice the risk, this system will be profitable in the long run. Looking at the statistics, we can see that in the worst-case scenario, this system has recorded 4 consecutive losses. This means that in money management, we need to consider how much capital will be lost in this scenario, and how it will affect our mental health. This is an example of a profitable strategy that works even with a win rate of less than 50%. We've already prepared for the worst-case scenario and won't have any issues if it occurs. You should backtest your system in 100 samples, calculate the success rate and the risk-to-reward ratio, and consider the consecutive losses. With this approach, you can achieve consistent profitability. The only way to achieve consistent profit is through this method. And if one day you find it discouraging, know that you will soon face major losses. But if you keep your hope, you will return to this method because it's the only path to success. Start building your own strategy and follow the right path. Building a strategy takes time and patience, so don't rush it. Keep working on it until it becomes second nature to you. At that point, you can expect good performance from yourself. Expecting immediate profitability after building a strategy is unrealistic. You should give yourself time. Start trading with small amounts, and after 50 to 100 trades, if you're profitable, you can increase your trading size. At that point, you'll become a money-making machine, capable of printing money without limits. Be patient, focus fully, and build your trading system, and don't act outside of it. In the end, you'll have a system that you believe in, and this belief will help you stick with it even during losing periods, as every system experiences them. Stick to it until profitable days come. Thank you for watching this video. Please subscribe to my channel, like this video, and leave your comments below so I can guide you further. Wishing you success.